So today, what we're gonna talk like today is a very interesting session. Uh, I think it's gonna be fun. I promise that. So today we're gonna talk about why only quality, right? Okay, we have a lot of companies. Why should we just invest in quality companies? And we'll talk about how to find those quality companies, right? And what mental model we should apply when we find a company to assess its quality. Is that good? So that's our discussion point today. Uh, so again, my name is Chandan. I'm a software engineer by trade. I also run SECdiver.com, which is a small website wherein you can get fundamental information for pretty much all the top SVI companies, right?
Mhm.
Provide a pretty specialized view where you can figure out the right value of the company. We provide fair value estimates. We do a lot of recommendations. Last week we launched Bargain Hunter. We launched portfolio tooling, right? So hopefully you can understand how your portfolio is tracking in terms of fundamentals, right? And I also host a masterclass with Gagan ji, who is a founder of Zillion. So again, um, next 30-40 minutes, ask a lot of questions. I want this to be a two-way street, right? Again, I'm not an expert, so this is a learning as it's a learning session for you. It's a learning session for me also, right? So don't hesitate. Ask a lot of questions. I whatever I'm showing you, nothing is mine. All these are some wonderful learnings that I found on the web, and I'm just copying them and sharing what has been applicable to me in my investing journey, right? So my goal is to hopefully share that, and hopefully my goal is that resonates with you, and it helps you with long term compounding and building more wealth. Okay. So here's scdiver.com, and this is how a homepage looks like. I would highly recommend you reading those seven top 8 lines. If that resonates with you, let me know. Message me. Are there some areas where you feel like Pradeep was talking about conviction, right? So where you felt like that, that's what I also felt. So share that with me. Share those examples so we can talk about it. Okay. Again, one more note. There's a reason we keep our data 1 year back, and the reason is so that when we predict, we know we are predicting based on future data, so we can check it against today. They did match, right? That's one reason, right? And second, remember all companies are growing, so the prediction values that we show will be much higher today in terms of the fair value estimates, right? Make sense, right? So this is how the landing page looks like. Let's say you search for Amazon, you will see like a fair value estimate, how much you should buy it, right? There's a range given to it. There is a time horizon wherein how much money you would made if I invested 9 years back, and what would the future look like, right? We show very smart, crisp information about what to look for in the stock, how revenues are trending, how cash flows are trending. There are links to graph it, plot it, right? You can see a lot there. Okay. Disclaimer, whatever today we discuss in terms of stocks, right, or tips, right, all these are not an investment advice. You should conduct your due diligence, right? You should consult your financial advisor, right? All these examples are just to understand the market and its behavior, right? Right. So okay, and please don't share with others, right? And markets are very volatile, so be careful, right? There's a good chance you can lose money, right? So I want you to understand that, right? This is a wonderful thing I found on the web, right? I'm going to take a pause, but it says in अरे भाई मेरी ज़िम्मेदारी बनती है तुझे चेतावनी की. So I'm just trying to tell you. So one thing that I'll tell everyone before starting the conversation is like you should only put money in the stock market that you will not need for the next 5 years. Because if something happens, you need that money, you may take it out at the wrong time, and that would be the bottom, and then it just rises up. That's what I've seen time and again, and you will see that in your career and your lifespan, right? So it's very important to only put money and not get greedy, right? And put only money that you do not need for the next 5 years. That way you can sustain, and you can come out of that pain, right? Because market will test you. There's no, like, it has tested everyone, right? If there was a strategy that would have worked until now, if that would have worked, all of us would be making money, right? So there wouldn't be market inefficiencies, right? There's a reason it doesn't work for some time, and lots many people give up, and then it works again, right? So, and the only people who shine are people who don't have leverage, who don't have any debt, and who don't have to pay any worry about bills, right? Because their life is all settled. They are there just for the long haul, right? That's what I
True.
So here's my philosophy. The number one goal is to not lose money. So risk management is the number one goal for me. That's why we are talking about this most important topic, is like why to invest in quality, right? So I'm happy not to make my $100 go to $200. I'm not happy even to make $1, but I want 100 to be 100. Right? So it's very important, right? Because there's a very famous phrase by Daniel Kahneman, who is a Nobel laureate. He says, we love making money, we love profits, but when there is a little bit of pain, when we lose money, it kills us. It's on the back of our mind every single time. So, and I feel our mental health is more important than anything else. Can we sleep better with our investments? Can we have that mental fortitude is the most important thing, right? So that's why risk management is important. I don't want to go into any random stock and just put it, right? I shared some examples in the WhatsApp channel of some companies, right? And you never know what can happen. That's why you need to go with quality names. Okay. So the second thing is buy quality companies. And again, everything is quality, right? But the problem is at what price, right? So let's say you want to buy a home in Mumbai and everyone is selling it for 1 crores, right? But suddenly someone says, I'm gonna pay 10 crores, right? Uh, I mean, that's too much money, right? When you know clearly market everyone is selling for 1 crore, right? But that's what happens in markets, right? There are some companies that are supposed to be sold for just $100, but they are selling for thousands of dollars because market feels there's something amazing going at the company, and so you don't want to be in the crowd, right? So you want to buy at a reasonable price, right? So the first important question that you should ask before picking a company is like, and this is my question that I ask for every company that I want to buy is, do I see this company to be there for the next 10 years? If I don't see it, if there's even a slight doubt, I don't want to go there. Make sense? If the company, if I feel there's a slight if, I don't want to take a chance, right? So I want that margin of safety. I want to understand that, right? Because I know every 10 years there'll be two recessions. So we have to somehow manage it. And if the company is able to survive, then it will big win, right? Again, do not overpay. We should, like we do our health checkups with the doctor, annual health checkups, we should do annual health checkups of the companies that we buy. That way we can see the trends. Are they growing? The key question is to ask, are they growing? If they are not growing, they're gonna not give returns. Let's say there's a company what that you bought for $100, and in the next 10 years you say, Chandan, I bought this, but the stock is at the same price. Yeah, there's a reason. The company didn't grow, man. There's no profit. It made the same profit that it was making until now. Maybe it's dropping, and so the market should actually drop the value, right? So the company has to grow. Like Amazon is a classic example of growth. You can see, right? When I joined Amazon, it was like less than $20 billion of revenue. Now it's like $500 billion of revenue, right? That's a growth, right? So if you can find them early, that's amazing, right? Then
So, sorry, do we keep the questions for the end?
yeah, no, go ahead, go ahead.
So my question is, like, in the very early stage, how do you figure out if the company is going to last 10 plus years? Like, there are so many of these IPOs. Um, what information would you need to 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 be able to invest in those?
Today's topic is that, so we're gonna go it. I'll
Okay.
be able to convince you today that we could do that. Uh,
Okay.
it's not guaranteed, but it's gonna give you some patterns that will help you gauge that,
Okay.
right? So the third most important thing of my philosophy is process, because if we uh, I don't know if your background, Arvindji, but let's say all of us have a different background, right? So my background is a computer engineer. So we what we do is when we implement, we do iteratively, right? So there's a process we follow, right? Right, in terms of deployment process. So likewise, in when we buy stocks, we need to follow the process, and scdiver.com is the reason for me to build to make sure that I follow the process, right? And there are some companies, and how do you find these companies? There are some examples that I wrote here how to find them, but essentially process matters. So make sure you start making like a checklist or something, uh, to and follow it every single time diligently. Okay.
Checklist. Okay.
Right. So again, as I said, the number one rule is do not lose money, and we should always remember rule one. Right? Fair enough. Right?
Yeah. Yeah.
So this is the recap from the last three sessions that we had. If you had missed it, I'm gonna just recap it. I'll highly encourage you to see the very first one, because that lays the genesis of what and how we look for. It talks about very simple things on how to value a company, how to find the right company, how to think in terms of mental model. So I'll highly recommend the very first video and the second video. Okay. So in the first video, we essentially talked about stock not being a piece of paper. It's not gambling. It's not speculation. It's not like I made my 100%. I'm gonna get out. It's about long-term ownership, right? It's a business ownership. It's like we own a home or we buy gold and whatnot, right? Like buy a property, right? We never check the price of it because we live in it, right? We like it, right? So, and we talked about how to calculate the floor value of the stock. So let's say somehow the conditions are so depressed and the price reaches to that position, you should not wait, you should buy it, right? Like it's like when you go to a Macy or Target and you have been eyeing that particular sari or that particular dress for a long time, or a Ray-Ban glass, and it was like always $100, but today it's $50. What do? You load up, right? So likewise, right? You should load up, right? You should not wait for it, right? uh, the second video talks about how to be contrary, right? When we see red color, what do you think? When we see the green color, what do you think? So we need to think differently, right? Right. And markets will teach you that you need to be humble, because when you are expecting something and it can go away from you, you never know, right? So you have to be curious. You have to understand what are the market expectations behind a stock. Why is it dropping, right? And if you can figure out why it's dropping, and if the expectation said, then you can make a good bet on it, right? It could be both sides, buy or sell, doesn't matter, right? There are various ways to do it, right? But going against the crowd is not easy. It's very hard. But those who do it, it's very rewarding for them. And you'll see it, right? There was a time in 2020 where it would be rewarding, right? Do you agree? There was a time in 2022 we had that then it was rewarding, right? There was a time in 2023, in October 23, it was the time it was rewarding again. Do you know, like in this year, last 20 in 2023, 15 so SPY had 20%, 25% returns, right? If you remove the top seven, it will be still lower than, right? But in that 20% return came in just October month. So if you just had all your money and put in October month, you would have made 20% returns for the full year. So that's the power that markets give you. Okay. uh, uh, the third session that we had was, we were talking about what we think and what happens, right? So what were some of the myths? Again, I talk about options and futures, which I never do. I have tasted bad blood, so please see that, and you'll learn why not to chase fads, why to not go for quick rich schemes, right? There's a wonderful story that we were taught in our childhood, right? The hare and the tortoise, and you know who won, right? The hare won, right? So it's about going slowly, but finally reaching our destination and having fun along the way, holding our ground steady. What I've learned is, like, if you get money fast, you also lose it fast because you don't value it much. So if you're here to make a lot of money and fast, maybe this is not the right session for you, I would say. This lessons are more for people who want to take it slowly, spend more time with family, but have a healthy life, have a wonderful life, right? Again, I want to directly call out certain strategies that you can do to have a wonderful life and still earn a good amount of money. So everyone knows about index investing, so I'm not going to talk about it, but it's going to give you at least 8%. It can be more than that, but at least 8%. So there are some additional funds. As an example, I shared that with you on the example side. So take a look at it. Basically, all these funds, the beauty of all these funds are, they are very low cost funds, and so they're gonna charge you less as compared to other funds. So and you'll see later that how paying those additional fees gonna cost you a lot of money, right? So you want to pay as much low fees as much possible, right? The second thing is, like, I'll say, I know people talk about Berkshire not having its own magic or charisma now, but I still feel Berkshire can make more than markets. And maybe we can have a longer discussion later why. But there are, buy Berkshire B stock, or Markel, or you can find wonderful investor gurus I have listed on my website, so you can look at them. You can buy funds in their mutual funds. They do it. That's another way, and they have all beaten the market by at least 2 to 3% every year, and we have a track record for them, right? The third is, like, invest in wonderful companies, which is what I'm doing. I feel I can do it, and that's what we are talking about. And there's some wonderful examples of companies that I've listed there. Right now, all these are very costly. They're expensive, even though they are wonderful. They're expensive, so I would not touch them. But it's good to learn why they are wonderful, right? It's good to know why they're quality. So hopefully, Pradeepji, Arvindji, that will give you some examples. So you should look at them, right? And there's another way to make money, which is like momentum trading, options, features, sector rotation, special situations, themes, fad, the next big thing. There are all these wonderful things. I cannot predict it. I don't know. That's not my cup of tea. There are big whales. I don't want to get caught into that. So that's why I don't touch it. But there are people who make a hell lot of money there also, right? Currency trading and so on, right? So this is a very hard part for me. I want to, as Warren Buffett says, if I have option to make money with one pole versus a 7 foot pole, I would go with the 1 foot pole. So that's what I'm looking for. I'm going for very easy investments that I can understand. Again, the same thing, just in a non-tabloid format. So here are some wonderful investors that have compounded at a rate which is more than the market. And there are various strategies here, right? There's this long-term investing that I'm talking about, like buying quality companies, right? There are people who do deep value investments, like Walter Sloss. There are people like Joel Greenblatt who invest, like who do rotation every year, but they still make 30% CAGR, right? There is Soros, who has done currency hedging and stock trading. Do you know what's the success rate of Soros? It's just 30%. So out of every 100 bets he makes, only 30% he makes success. But the reason he makes a hell lot of money is because when he makes a bet, it's a massive bet. It's a massive, massive bet. So he loses 71 times. Still, he has compounded his rate of more than 15% a year, right? For like 35 years. That's amazing, right? Then there is Jim Rogers. I don't know. He's a quant trader, and he has 30% a year for the last 50 plus years. That's amazing, right? But he does it within a particular, um, I would say, amount. He has not crossed that amount. So whenever the fund crosses that amount, he gives back the funds to the people. Warren Buffett is the only person in the world who has compounded all the money, like whatever he has. So he has 100, like today Berkshire is almost close to like $800 billion enterprise, right? Right. Uh, uh, and this father of investing called Benjamin Graham. He has 20% return for like more than 10% return for 20 plus years. And his best investment was Geico. Earlier, he wrote a wonderful book called Security Analysis and Investing Genius, right? And one more book, Intelligent Investing, I believe, right? And he's called the father of investing. And he also used to say buy cheap companies, buy at book value. But in his later in his life, he bought Geico, which he held it for like more than I don't know 10 plus years, and he made like 100 times, 200 times of his money, right? So that's the beauty of buying quality companies. Again, this is where I was talking about like the fees. If you pay 1.5% fees to your financial advisor or your company, then you lose like 100K in the 40 years, right? And my goal is not to even lose that 100K. That's why I'm trying to do it myself, right? So it's a lot, like, and right now we are talking about like $1,000, right? But if you invest more, it's gonna be a lot, right? So right. So again, going back to our key topic today, why only quality companies? Okay, Pradeep ji has a question. Please go ahead, Pradeep ji.
Yeah, that is regarding the fees you mentioned. So when I was trying to see what exactly I have to do, I tried to look for the financial advisor, and they usually charge around 0.9 to 1.2%, and depending on that. And when I asked them, "Will you be able to beat S&P 500?" They say, "No, we cannot beat S&P 500." Then I said, "Then what's the point? I will just get the VOO or any 500, and I will get more money." So what they said, they will balance it, but their benchmark is different than S&P 500. They will just make a little bit more money and with the bonds and other thing, but they will not be able to beat it. So I'm just wondering, not sure, Chandanji, if you have an experience in that, but wanted to check like who then will get the financial advisor. I can easily put in the S&P 500 and just forget about it.
So Pradeep ji, I think you are a very smart investor. I would say you know about index returns and everything, but not a lot of people know about it, right? That's one reason, right? People still don't know, and they still have this age-old mechanism of going with the financial advisor, right? People sometimes want relationships, right? So that's why they also invest. There are many reasons. I don't know why people got it, but I think there's a hell lot of money that's tied to this kind of investing, right? So they go with financial advisor and do it. So a lot of people do it. I don't know why. Maybe they get scared, they need some conviction, they don't know, when the markets go down, they feel like they're gonna get out, so they need someone to ask, okay, should I continue to stay in the markets or not, right? What do you think? So there are people, uh, based on their own levels, I feel. I don't know, to be very frank. That's the short answer, right?
Okay, so maybe kind of gym trainer. So people get a gym trainer sometime for the disciplines, maybe for the discipline.
Yeah, but in this case, clearly, like as you said, right, as you alluded, right, if I'm doing SIP, right, like I'm investing every month. If I put in VO or whatever or the SP100, I'm good, right? So there's no need, right? Markets go down,
Yeah.
I'm fine, right? Because everyone's going down, right? So it's not the mental cognitive load on me, right? I'm only going down, right? The problem happens is like when you go down and the market is going up. That's when the pain
Yeah.
starts.
No, that is true. But 2022, I think 22 was there, where there was minus 22% return. At that point, if someone has put in the bonds and take it out, let's say in 2023, then that person might have saved 20%. But that's a rare year out of 10 years, maybe 1 year, kind of like
The
that.
challenge is we cannot time the market. Even the experts,
Yeah.
like economists, cannot do it. So how can we do it? So again, remember, like if you are looking for one year, 6 months, 15% return, then this is not the right place, Pradeep ji. We are
Correct.
looking for people who want to invest for the next 5+ year, 10 years.
5
Right?
years.
We
Yeah.
want to be there.
Yeah.
And here's one. I don't have that graph, but I'll tell you. When I came to US in 2012, right? This is a true story. Okay, all the companies that I wanted to buy, right? All the companies, they are at least 5x. So in 10 years, they are 5x. So imagine,
Right.
let's say if you get only 8%, 10%, you make it, and you don't have the confidence, right? You won't put all your money. That's one, right? Right? You'll put little because you feel like you're at risk, right? So imagine if you put all your money, we're in 5x today, right? Makes sense without any risk.
Right. Makes sense.
So it's all you need to decide. The compounding power is just amazing. That's what I want to teach. This is something I missed it. And
Yeah.
I'll tell you another example. I have invested in mutual funds in India, and they're actually good. I was surprised. So I invested in 2010, right? So now it's like 14 years, and the market has grown at least 15 times from just the market.
Yeah. For
Okay,
sure. Yeah.
but my index fund has not even given me 15 times. It's only
Yeah.
given
It
me.
will.
So I'm surprised. And do you know why?
Yeah. I don't know.
It's because of fees.
Yeah, either fees or something else, because their mutual fund is kind of index fund or not.
I'm really
I don't
surprised.
know about
It
India market.
didn't make even like 5 times. Like market has given 15 times. So I was like, okay. So that's why I want to do what I know of. Fair enough?
Oh, okay. Yeah, fair enough. Yeah.
Good.
Thank you.
So again, going back, why we want to do quality, right? So that's the topic today. So before we talk about quality investing, let's understand how do we define quality in a normal world, right? How do we say, oh, this is quality in our daily lives, right? So anyone wants to volunteer and talk about let's talk about quality in by giving some examples in a like where we see observe quality, right? Let's go over the room, right? Maybe Bhagwan ji can say, anyone can do you want to volunteer and tell about quality that you're seeing in your daily lives? Where do you look for quality?
Maybe one example I can provide: clothes. So we can buy clothes from any range we want, but when we wash them, if the clothes is not, or fabric is not good quality, you will feel it in couple of months only. They are getting old or not wearable, or you may not like it. But those are quality clothes. Even after 2 years or 3 years, you will find it good. You will feel good about them.
Thank you, Pradeep. Please write more there in the chat box, Pradeep. So everyone can do it. Arvind ji, go ahead. Pranab ji, go ahead. Like one of you, keep going.
Yeah, so classic example is when you go for groceries, right? You get cheap things, you get quality things, right? Which one you purchase? That's about it.
What do you like to purchase, Pranab ji? Cheap or cheap quality?
Of course, quality.
Wonderful. Thank you, Pranab ji. Arvind ji.
I was actually thinking of clothes only because these days, because of the fashion trends, you can go to these websites and buy $2, $3, $5 clothes, but once you wear it like for one time or two times, then you don't even want to look at them. Whereas if you buy good quality clothes, you will like them. They will last long, and you will also like them not just 2-3 years down the line, but like maybe 10 years down the line, and you're still having them and you enjoy wearing them.
Wow, I like that answer. Bhagwan ji. Okay, Medha ji. I think Medha ji joined us. Welcome to the group, Medha ji. You want to share?
Hey, Chandanji, Medha is my daughter.
Okay.
Just learning things. So
Bhagwan, you want to say something about quality? Why you like to, do you buy something quality? Have you had any experience with any quality products in your mm, daily life?
I mean, stocks point of view, yeah, as you mentioned,
What stocks? Like,
Chandan.
I'm talking about daily life. Forget stocks. We're not talking of stocks. We're talking of normal lives.
Okay, I missed that part, something like that. So, maybe I'll skip Chandanji. Not in
Okay.
it.
Pradeep, you want to say something more? Or are you done?
From quality wise, let's say any electronics as well. If you get, let's say, another example, I like the quality electronics, especially speaker system and all. And you can a speaker system. If you want a little bit more quality, you have to spend a lot more. And then, but when you listen to it, you can easily recognize which one, which speaker set is good. So when you listen to it, you will feel that vibe. So
I like it. Thank you, Pradeep, for doing it again. I appreciate that. So here's some examples, right? I'm pretty sure like we all want quality living, right? Or is there someone who doesn't want quality living? I want to know. Right? We all want quality education and learning, right? Right? We all want quality friends, right? We all want quality life, right? We want quality food, right? We want quality products, right? We want quality electronics and so on, right? There are a lot. Is there anyone who want any of this bad? Right? 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 The challenge is we buy bad stocks. It's very interesting, right? It's very hard to figure out why, but that's what we do because we don't understand them. We have spent a good amount of time studying in college, 4 years, 6 years, and all that, depending upon masters and what you've done, right? And we pay a good amount of tuition to learn it, right? But we don't pay the same tuition and same learning in the stock markets, and hence we end up paying. Hence we end up paying a lot of money. And personally, I paid a lot of tuition. In India, there was a stock I bought. The owners were not good. They are thieves, right? So I lost all my money, right? I lost a pretty good amount of money. So I had a scar, and so because of that scar, I never invested in the US stock market, even though I always wanted to. So 7 years I didn't do it, but I had this understanding because I have seen 2008. I knew that when the markets fall, you have to load up. So when 2020 came in, I converted all my Amazon stocks, sold them, and bought whatever I could. But the problem was I didn't understand quality. I didn't know what were quality stocks. So what I made some money. I thought I basically Wealthfront made me lose like $50,000 because they could not sell my Amazon. They basically took my cash and put it in some random stocks I didn't know of. So I asked them to sell it. They said it will take 7 days. I was like, why 7 days? I'm gonna lose a lot of money because of that. So I lost 50K. It was crazy. So I wanted to make that money, and that's why I got into the investing journey. And so I bought stocks. I covered all my money, but then problems happened again, right? And that's why the problem was I didn't have a process to select a good company. And so then when I learned, then the last 5 years is just more about learning stocks, reading books, and that's how I learned about what to do, right? And so I have a process now. I know what good companies are there, but I still miss 2020. I hope another thing happens so I can buy all those wonderful companies again and just sit and relax, right?
I think we all hope that.
Is everyone able to see the quality screen?
Yep.
Okay, so again, as we talked about, right, we all want quality things in our life, in our daily lives, right? But we forget to do the same thing in our stock markets, right? And that's the focus of today's discussion. And here are some examples, right? Why we want to call it, right? We want to go to like a very good neighborhood, right? We want clean air, right? We want to go to the best Ivy League schools, right? Is that fair? Right? We want to go for wonderful vacations and cruises, right? We want to go to like a wonderful Michelin star restaurant, right? Right? Or buy the latest Apple iPhone or Gucci bag or Tiffany, I don't know, right? Right? And there's a reason, right? Right? Because it's known, right? It's for the long term, right? We recognize it, right? It might be a status symbol, right? There's a historical proof about it, right? It's stress free, right? Is that correct? Does that resonate with everyone?
yep, there is a saying in Hindi, "Mehenga roye ek baar, sasta roye baar baar."
Wow, I love that. Thank you. I'm going to add that. So, Hira hai sada ke liye, right? Nischint, bharosa, vishwas, right? We can sleep well, right? Right? And that's the focus for today. I really, hopefully, that's a takeaway that comes out from this discussion. Okay. So I hope everyone is bought into this idea of quality. right?
Mhm.
Wonderful. So here's why quality investing is wonderful, right? So if you had invested $10,000 50 years back in the stock market, and if you had just done market, like which is index, right, you would have made like $700K. How much? $700K. Okay, 7 times, whatever, like 70 times, right? Right. But if you had found a wonderful company, it would have been 3 million, close to 3 million. Do you see the difference between like a normal market buy versus a quality buy? It's massive, right? And that's what opened my eyes, right, when I saw this, right? This is from a wonderful book by Adam Cecil. So here are some examples of businesses which have compounded for more than 30 years, right? 30 years, it's a very long time, right? So here's some examples, right? Right? Uh, does anyone recognize some of these names? Right? There's no tech here, by the way, right? There's very less tech names, right? Which we follow, right? Right? There's standard names here, right? Right? So here's some examples. I would highly recommend everyone to study them, right? Understand why they became great. What was them when they started that made them amazing, right? Any company that anyone want to talk about that they saw here that was surprising, or they want to share something?
One company, let's say Starbucks. Starbucks is what 18% you have mentioned, but in last 5 years, 4 or 5 years, it's almost constant. Nowadays, maybe it's because of the situation in the market and all. Tech companies are still growing, but these kind of non-tech companies, they sometimes get stagnant. Let's for example, Coca-Cola. It's a very big company, but it has been stagnated for years.
Right. That is true, right? So that's the beauty, Pradeep ji, right? Like you never quality investing also sucks sometimes, right? If everyone knows that this was working, everyone would be in caught, right? No one would go to all this special stocks, right, or special kinds of investing, right? So there are moments where it doesn't work also, and then you need to have the stomach to bear it, right? And we'll see an example, right? Here's one example that I want to show you later, right? So before that, right, let's just talk about the compounding magic, right? So if you had invested $1, right, and got a 30% CAJ for the next 30 years, that $1 becomes how much time, Pradeep ji? 2,620 times. Does it make sense?
Yep.
And if you see, the growth is not in the first 10 years. Do you see that? So if you feel, oh, I made 13 times of money, I'm gonna get out of it, right? That's what we do, right? I made 100%, I'm gonna get out of it, and that's when we lose this, right? We have to wait a longer time. And do you see how it grows? This is a classic example of a bamboo tree. It's the same way, right? It doesn't show up for the first 5 years. It doesn't matter how hard work you do, it doesn't show up for the, but in the next year, it just jumps ahead. It just like pops ahead. It's a much bigger scale, right? I don't know if you observe the same thing with our kids, right? When you start teaching them, maybe Arvind Ji can relate more, right? When you start teaching, it's very hard. They don't know the words, but as they grow up, then we when they are starting up, we say, "Ye to bolta hi nahi hai, he doesn't talk much. I'm worried about it. Let me go to a doctor," right? But when they start talking, this guy keeps talking. There's no end to it. How do I stop him, right? Do we say that? Right? So the single idea is like, as we give it more time, things become more wonderful, right? So give it that long term time, and that's gonna bring in a lot of rewards to you, right? So now the question is, how do you find quality stocks, right? How do you find this, right? So the simple solution is like, look around your home, right? You'll find some examples, right? You'll see uh, what paint you have done at your home, right? It's coming from Sherwin-Williams, right? Or what electronics you're buying. It could be Apple, right? Or it could be anything, right? So you need to look at some examples. You can look around and you'll find some good companies, right? Um, so so what I've compiled, like, so there are some patterns and characters that I've compiled. Again, learning from various wonderful investors, right? So I'm gonna showcase that. And so here are some characters that I found for companies that could be termed quality, and why they are able to make monies over a very long period of time, right? So either they are monopolies, they are duopolies, right? They have high returns on capital, right? They have a very long runway of growth, right? They keep reinvesting their money, so that they keep compounding, right? Right? They do opportunities buybacks. They do timely mergers and their acquisitions, right? When the market is falling, when all the companies are losing money, they make acquisitions. the management has a lot of skin in the game, right? They only they have a very big ownership, right? And you can see that, right? Right. Anyone wants to chime in? Any questions here?
Daddy.
So going back to Pradij's point, right? Is it easy to hold quality stocks, right? He was talking about Starbucks example, right? So last 2-3 years, it has not done much, right? And Pradij is correct, right? It's not it's not necessary that it does. And Charlie Munger, one of the geniuses that I really admire and who has taught me a lot in investing, right? In terms of principle thinking, not like in terms of like stock tips and all that, but in terms of how to think principle, right? He has been a guiding factor for me, I would say. So he says in just a one simple line, it's not supposed to be easy. Anyone who finds it easy is stupid, right? It's actually not easy. It's very tough, right? Um, I don't know if you know about John Templeton. He's regarded as one of the best investors. He invested in Japan, and market was tanking and tanking and tanking, and he was there for 15 years. For 15 years, and then he saw 1,000 times his returns. He had the fortitude to be there in Japan for 15 years. That's just amazing. That's like bowing down, right? I want to bow down to him, right? That's the power, right? So markets will test you. It's not easy, right? It's definitely not easy. And here's another example, right? As we have seen, right? Nvidia has been the best stock, right, for the last, I don't know, 2+ years, right? Right? We all seeing the growth, right? Is that correct? Pradeepji, Pranabji, right? Arvindji, right? So you'll see, right? Like, yes, it has compounded, it has some wonderful return, but people who have holded Nvidia stock for the last, like, I would say 24 years, they have seen 90% drawdowns, right? So it was not easy to hold, right? In 2004, 2005, right? It had 90% drawdowns. It has like lot of 50% drawdowns where you would feel that, oh, I should get out of it. Why didn't I sell it? It was already at the peak. I should have sold, right? So it's not so easy. It's very hard, right? And the thing there is like not to look at the stock price, but look at the business, right? And that's what we talked about in our first session, right? We should never look at stock as a piece of paper or as a currency to trade. We should look at it as a business. If the business is growing, the management is seeing what it's believing in, the customers are coming in, the stock will grow, it will show up, right? Because profits will be coming in, and what market values is by profits, right? It's a P by E ratio, right? The second part is earnings, right? P by E, right? The E is earnings, right? If the earning grows, the price will grow. It's as simple as that, and that's what Nvidia has given, right? And so that's why the stock is doing wonderful, right? Right. So this is another wonderful quote from Jeff Bezos, right? He says, Warren Buffett, your style is so amazing, right? And so simple, right? Just buy wonderful companies. Why it doesn't work, right? Why don't people do it, right? And the reason is simple, right? We all see our neighbors, or we all see people, or we hear this wonderful news that someone made 2x, 3x, and we just chase the facts, right? No one wants to get rich slowly, right? And Warren Buffett made his first $1 billion at 61 years of age, right? Right. And then the next 10 billion came in the next 5 years, right? And now it's $100 billion, right? So that's the beauty of compounding, right? Uh, uh, so typically we as investors just focus on returns. Oh, is saal kitna bana hai? Oh, I made 20%, I made 30%, right? We all focus on that, right? But what we actually should focus on is like, did I buy a risky stock? Will I lose my money? Is it like daily? Is it like a mental cognition load for me every day? I have to think about it. Do I have to open my screen and check the price every day? Does it impact my behavior? I need to does it impact my behavior against my family, against my friends, right? 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 So we should focus on that. How can we maintain our cool, right? And trust me, after I stopped spending time on options, my life is so beautiful, right? I don't worry about it, right? I have bought good companies. I don't have to worry about any of them right now, right? So that's the beauty, and the returns are automatically coming, right? Uh, um, this is how good companies behave. It's like this analogy of like a man walking with his dog. The prices jump around as the dog moves around the park, right? But the man is on the right trajectory, right? And that's how the business are, right? They keep growing. You don't have to follow stock prices. You have to use that as a hint, but look at the business, right? And here's my philosophy again, right? We want to make sure that we want to do risk management. We want to avoid loss of capital. So that's why we want to buy only quality companies, right? And we want to only buy if we believe the company is going to exist for the next 10 years and the business is growing, right? If the business are growing, you won't see the returns that you're looking for, right? Because the compounding won't come in, right? And so never overpay, right? Price matters, right? Do health checkups. That's very important because you want to check whether business are growing, right? Um, and how do we know the business is growing? The companies give all those information to you every year, every quarter, right? They have quarter reports, they have 10Ks, they have proxy reports. They give all the data. So you just have to read them. But the problem is we don't have time to read it, right? We just go with what CNBC says or what our friend says or what Twitter says, and we just says today, I guess bank stocks earnings came on and they didn't have good earnings, right? So everyone's selling it, but actually banks are doing really good, right? But we just go by the news because we don't understand reading between the lines, right? Again, process matters. So please make a process, whatever your process is, right? Do that diligently, right? And just in case, if you forget anything from today, right? Again, remember risk is the most important part of it. If you want to buy a stock, don't buy on a if condition, right? Oh, if this happens, definitely I'll make it on. Just go on facts. And how do you know about facts? Because historically you've seen, right? We talked about, right? हीरा है सदा के लिए, right? जो 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 अच्छा माल खुश रहे और नहीं तो रोए, right? आपने कुछ शेयर किया था, right? So it's like that, right? So we want to buy quality, we want to sit tight, we want to relax and have fun with our family, right? Again, final thoughts. Take care of health. That's the most important part of your life. That's what we are here for, right? We want to be, money will come in. If you buy in quality companies, there will always be upside. We'll always make your money. It's hard to predict the future. So take care of health. And it's always a work in progress. Start slowly. Learn about the companies that you want to know more, and keep buying slowly, right? When the market falls. So best time for buying is when the market falls. Just remember that, right? Again, disclosures. Please do your due diligence. I'm not I'm not a financial analyst, so there's nothing buy and sell here, right? All these examples are just to make you learn, right? Yeah. So what's next, right? There are some resources on sscdiver.com that I will recommend if you're starting for the very first time. I would go here and I would go into this. I'll try to buy one of these books, right? See some of these videos, right? Do a little bit of reading, right? Understand what it means, right? Understand what markets mean, right? Understand all that, right? So I would spend some time there, right? Right. Any questions? Here are some old videos that you can see it again. And this is my contact information. I just wrote a small Substack talking about investing. Just started writing it, like how do I start buying stocks? What should we do our portfolio allocation, right? What I'm looking for in the market, right? So you can check it out here. And thank you so much. Thanks for attending. I appreciate you all coming. If you have questions, again, don't worry about it. All questions are wonderful. Please share with it. And if today's topic has helped you or improved your thinking, would love to learn what we could do wonderful here. Okay. Thank you. Any questions?
Thank you so much, Chandanji.